Hi, everybody. We are now live. This is the first ever market thoughts that I'm doing on YouTube Live. I am super excited for this, and let's jump in and get started. So, we've got a bunch of really cool things to share with you on this live stream. The first thing that we're going to talk about is market mood. How I call it the market mood. It's how I'm viewing the market conditions. It's basically the market that is speaking to us and telling us whether it is going to move up, down, sideways, where it's at right now. After that, we're going to jump into current trade setups. Then we'll discuss ways that you can set yourself up for success. And then finally, we will do some open Q&A. I'm going to be looking at the chat box, the comments throughout. So I already see some people joining live. Welcome, everybody. Go ahead, type in a comment if you could see and hear me okay. This is the first time that I'm using StreamYard, and quite frankly, yeah, I need to know if this stuff is working and you can hear me loud and clear. So go ahead, type into the chat. Let me know that you can hear me okay. All right. So, while we are waiting for that and for more people to show up again, well, welcome everybody. Um, let's dive into the market mood. So let me go over here, share my screen. So share screen. I want to share the full screen over here. Perfect. Thank you, Sal. Sal is one of our elite members. Super nice guy and always pitching in and helping out. So, uh, are you able to see the screen that I'm sharing? All right, perfect. So the first thing that we're going to discuss is current market mood. That includes analysis of the major indexes, number of distribution days, new highs versus new lows, and the quality and the quantity of setups that I'm seeing, as well as open trades and current performance too, right? Like how we are performing in the market is a really key gauge of how the market is treating our systems, right? If we're going into the market with a plan, and uh, sometimes the market will be very conducive to the plans that we have. Sometimes the market will squash every trade that we have, and that is great feedback, and we want to pay attention to that. So we'll go through all that. So the first thing here that we're looking at is the major indexes. I like to start with the monthly timeframes up here. Well, we've got the monthly timeframes of the S&P 500, Nasdaq, Russell 2000, New York Stock Exchange, and the Dow. Each of them hit fresh highs this month, except for the Russell. So the Russell is still in a sideways trend. So I feel as though it's important to keep that in mind, right? When we're thinking about the longer term timeframes and what we get a day like this, right? Like let me just quickly switch over to the daily timeframes where many stocks, right? Like here's the S&P 500, pretty tough day on the S&P 500, pulling back to the 21-day moving average. Here's the Russell 2000 testing the 200-day moving average. Well, when you start to see stuff like that, and you start to see some of the stocks in your portfolio, and like, oh man, like the market is just getting creamed here. It's important to think about where things are in the bigger picture, because when you're looking at things from this 10,000 foot view on the monthly time frames, we've just been chugging along really all year on the S&P 500. So it helps to give perspective, right? And it also helps to give perspective when you are looking at all of the indices together. I like to think of them as sister indices, where one kind of affects the other. So um, for right now, all of them are in an uptrend aside from the Russell, which is still moving sideways here on the monthly time frame. Let's take a look at how things are shaping up on the weekly. On the weekly time frames, here's what we've got. We've got a reversal week so far, pushed higher yesterday, so far is pushing lower here. And something else that I want to point out too, and this is something that I kind of bang the drum every weekend that I meet with our elite members, and that's that. While we can observe a bar that is not fully closed, it's important to not draw a definitive conclusion on that bar, right? So anything can happen. It's well, what's today? Today's Tuesday, right? So anything can really happen from this point. Well, we could reverse and close at fresh highs. We could absolutely collapse from here. We don't know, but we do know that as of this point in time, S&P pushed higher and is near the bottom of its range. Same thing over here on the Nasdaq. It's right on the 10-week line. That's that red line right there. You have the Russell, which is actually below both its 10-week line and that line right there. That's a 40-week line. Um, you have the New York Stock Exchange, which was at fresh highs, pulled back to the 10-week line, and you have this right here, the Dow, which is pulling back as well. I'm also tracking this too. Started tracking this relatively recently from one of our other coaches, one of our other Mara coaches that tracks this too. He tracks the IBD 50, and for good reason too. The reason why is because many of the high growth, high momentum stocks that we tend to gravitate toward fall within this index. So it tends to be a good gauge. Like back here, like even last week and the week before were fantastic weeks where we made a lot of progress. But for most of the year, it's been you'll see stocks rally hard for a week or two and then tend to pull back just as hard. So it's been an environment where taking gains faster has worked and has worked well if you're trading from the shorter time frame. Intermediate term time frame, it's been difficult to gain traction. Long term, it's kind of been a smoother ride, and you can see that basically from here on the monthly time frames, right? So that's part of the mindset of looking at all these things. Um, Again, if you guys have any questions at all during this live stream, go ahead, pop it into the chat, and we'll go through some of it. So let's see here. Yeah, so we spoke about the weekly time frames. Now over here to the daily time frames, and you can see how the market is starting to pull back on the S&P down to here, testing the 10-week line on the Nasdaq, testing the 200-day moving average on the Russell, testing the 50-day moving average over here on the NYSE, and pulling back over here on the Dow. And when we're talking about trend analysis, and this is something else that I do towards the end of each day, I will update this spreadsheet here, and it's something that I like to keep track of, which is the current market condition. The way that I like to track market conditions is to set it up like a kind of like a traffic signal, right? Like so, if you are driving, like there's a red, yellow, and green light. That's kind of how I think of the market. And when it's a green light, that means that everything is working and working well, and breakouts are working. My system's working. The market's in a nice, smooth uptrend. And so when the market is like that, what I want to do is to be betting at my heaviest, right? And it makes sense. Everything's working. It's a good environment. It's a good environment for my system. My trades are working. So uh, go ahead and step on the gas. When things are kind of iffy, I'm starting to ease up on the gas and I'm starting to pump the brake a little bit. That's a yellow condition. The red condition, it's like things are very choppy, very few breakouts. That's actually what we started to see over the weekend and more yesterday. And so, what because of that, that's one of the things that helped me to scale out of positions. And so I actually, in my short term account, moved to cash yesterday, like midday. So um, let's see. What else? This is interesting right here. So we already spoke about this more or less with the monthly, weekly, and daily trends on each of the indexes. And I would encourage you guys too, if you're following along. It's great to have a spreadsheet where you are tracking the stuff. I know that if you're seeing something like this for the first time, you might be like, well, what in the hell? That seems like a lot of work. And well, we're all from different walks of life, right? Like you might have a full-time job. Maybe you're trading part-time. Yeah, maybe this is a hobby. Maybe you're full-time. Actually, go ahead, type into the chat. Let me know. Like, are you trading part time, full time? Are you on your lunch hour right now? Well, what's your story? Um, this is something that I was doing manually back when I was trading part time. When I still had my day job, I've been trading for over 20 years, but I only went full time with my trading about 3 years ago. Most of it had to do with my own mindset, right? Like for you guys here, that you might be familiar with the book, the Marrow Mind Shift Guide, and think that I'm the mindset guy. But the truth of the matter is that like we all have beliefs and belief systems, and we're all continuously going through this evolution process. So really, like up until 3 years ago, I lacked the confidence, even though I had consistency in my trading, to make the move to full time. Um, Once I finally did, and now I'm doing this full time. Now it's I'm putting all the stuff in a spreadsheet, sharing with members, stuff like that. But for a meaningful period of time, I was doing all this stuff manually. And so the point of that little rant is that it doesn't take that long. If you are trading part time, you could do that too. And logging this here, like just like which way the market is trending, up, down, sideways, and distribution days, that kind of thing. That's something that you can do in about 5 to 10 minutes at the end of the day, right? Like you don't even have to be there while the market is open. I tend to do this stuff like after the market is closed. So we spoke about which way the market was trending. Distribution days. Distribution days. Come over here. It's these. I have it flagged on the S&P and on the Dow. And distribution day is just a down day on the index of at least 0.2% or more. And the reason why that is important to track, right? Like, why is that important to track? You tell me. Well, why do you think that that's important to track? Again, go ahead, type into the chat. Let me know why. If you know what a distribution day is, number one. Who here knows what a distribution day is? Type into the chat. Let me know. And also, uh, if you do know what a distribution day is, tell me why you think it's important. Trying to get a sense of the room here. Who knows what a distribution day is, and who can tell me why it's important? A distribution day is a down day on the index of at least 0.2% or more on heavier volume than the previous day. The reason why it's important is because it shows institutional selling in the market. So clearly, you could have a few of them and still be in an uptrend. The problem with distribution, right? Like when distribution days start to become problematic, is when you get a whole bunch of them in succession, right? Like you started to see like a whole bunch of those little flags over here, and that's when the market started to trend sideways, get choppy. At this point here, and that's something else that I track too, Uh, we have had 5 distribution days on the S&P 500 over the past 25 trading days. Over the past 10 days, right? Like, well, when it starts to get to be too many over a short period, we've had 0, right? Like today, it's on track to be the first distribution day that we've had in more than 10 days. Same deal with the Dow. So we'll see where things happen here. Actually, on the Dow, it may not qualify as a distribution day because look at the volume down here. That's interesting too. And so you might start to be thinking like, well, what's the point of all this, right? The point of it is goes back to what I was saying earlier with this, right? Our risk formula, the whole red, yellow, and green risk system, right? Like you want to be betting heavy when things are working. You want to be lightening up and pumping the brakes when they're not. And so that's what all this helps us do, and it's what really gives us an edge in the market. The next thing to talk about is the number of new highs versus new lows, and that got really wonky yesterday, right? So I'm tracking the number of stocks making new highs versus new lows each day. Reason why it's kind of intuitive. The reason why is because it's hard for major indexes to keep moving up if the number of stocks within them aren't moving up too, right? Like take a look here at the Nasdaq. This down here is an indicator telling me how many stocks each day within the Nasdaq are making new highs versus new lows. Now, yesterday there were 54 stocks making new highs and 117 making new lows. Kind of hard for the index to keep on pushing higher if the stocks within it are not also pushing higher, right? So it's when this gets out of whack, that's kind of like the canary in the coal mine telling us that hey, something's up, lighten up, and be careful with new trades. So that's what I've been doing. Um, let's see. Well, what else do we got? So we spoke about new highs versus new lows. Oh, same deal over here. Well, with the New York Stock Exchange, the number of stocks making new highs versus new lows, and on the NYSE, it's been a bit better, right? Like you don't have new lows overtaking the number of new highs, but it's still like just having one of them be off like it is enough to cause a lot of chop, a lot of churn in the market, and a lot of people want to be tuned into to the news and social media to see like well trying to answer the question like why this is happening, why that is happening. If that's something that works for you, that's all well and good. I actually think that there's two stories being told, right? There's a story that's being told by social media, by all the talking heads, and there's a story that's being told by the market itself. I like to follow what the market is saying because that if you're aligned with the market, you're going to be like on course. Like you're going to be trading in step with the market. That's one of the goals that I have. Um, so let's see. Well, what else? What else? Trade grades. Most of the setups that I was observing actually here's the list from over the weekend, right? So I 15 stocks, right? Like most of the time in a good market, I'll find at least 30 setups, and that's from my own universe list, right? So for everybody here, let me tell you what a universe list is. So a universe, um, actually, I've got it right here. So a universe list is all the stocks that I'm interested in that pass all my various screens. Well, we don't have time to go through all of it here, but the purpose. And I wrote a blog post about universe list too. You could go check it out on my blog marrowwealth.com. In fact, I'll write that into the chat marrowwealth.com. Uh, and see how that works. Let me know if you guys are able to see that post. Uh, so far, the chat has been quiet, so I'm just curious, like if Streamyard is showing the comments in real time. So if you're here, just go ahead, post another comment in here. Let me know that the comments are indeed working. But anyway, so from the universe list, like so this is just like all the different stocks that I'm interested in that pass my scans. And so I'll run through this list here, right? There's about 400 stocks or so on this list. And what I'll do is I'll see which ones are setting up in actionable patterns, right? Anything that's setting up in an actual actionable pattern, I'll throw onto this list here, right? And I'll do that on the weekend, and I'll do that each day, like after the market closes. And I'll see like, oh, what's setting up in what way? How are things moving? Are things breaking out on heavy volume? Are things pulling back on light volume? Um, which sectors and which industry groups are moving, and I'll keep track of that stuff. Particularly over the weekend, there were only 15 stocks that were setting up in actionable patterns, and none of them grabbed me. Right, like you might see this over here, this column, gut feel. A lot of people come out and they say like don't trade off the like your gut or your emotions or any of that thing. Like I think that one of the important things to do is to be able to trust yourself, right? Like it's not just hearing about like uh you know it's different than hope, fear, and greed. That your gut feel is your experience that's talking to you. So if you've been playing for any length of time in the market, like if you've been trading, let's say for a year, more than a year, uh, what you want to start to trust. uh, you'll have an initial reaction when you see a trade. You want to start to cultivate that, or at least like I like to start to cultivate that as part of the analysis to be able to trust myself. I speak to that because I've had such a tough time trusting myself, like, over the years, that actually that is relatively new to me. Like, I'd say, like, well, within the past, uh, 4 years, 5 years, like, I really started to trust my intuition more, where I'm, uh, relying on that more heavily, but it's not everything, right? Like, you still wanna go through your own checklist, make sure that you have a we actually have a pretty cool tool on the website called the Trade Gauntlet. Here, let me show it to you. Just pulling it up on my site over here. So you would log in, use this tool called the Trade Gauntlet, and then it's basically a weighted average checklist of the important things that a growth stock should have. And you go through the checklist, and at the very end of it, you'll end up getting a composite score. And if the score is high, then hey, that's telling you that this stock meets the criteria. If it doesn't, then it's telling you that, you know what, like, uh, yeah, maybe your gut feel is a 5, but this trade doesn't have most of the things that you usually look for. So I'll factor all that stuff in too. And yeah, this week, I went into the week with only 3 ideas that really like when I took a closer look at them, uh, looked halfway decent. I didn't actually trade any of them. There was 1 stock that was a B grade, 2 that were a C grade, and this is the gauntlet score that it ended up getting. Not that great. And yeah, as of right now, there's only 2 stocks out of the 15 that are positive on the week. So taking all of that into account, what's the market telling us, right? Or if you're following the process like this, right? Like I should say, what's the market telling me, right? The market is telling me that, hey, buddy, you should be pumping the brakes here because things aren't working for your style of trading. Great, that's great information. Well, when I'm speaking to our members and for everybody that's here right now, I'm not sure who's in the audience, but what when if you're setting up something like this for yourself, like that's how the market is going to speak to you, and you'll be able to read the market just like you would read a book, just like you would read if you're musical sheet music or whatever your profession is. You'll be able to be have that level of intuition into the market, and it's just from doing it so much, like you get that feel, and this is how you do it. So. Uh, so I factor all that stuff in, and I also factor in my current win rate. So for open trades right now, I don't have any open trades. I closed them yesterday. Um, there was 2 wins and a loss that I closed out, and my batting average over the past 10 trades has been 50-50. And a lot of people might look at that and say, like, damn, like you're only getting 50% right. But the thing with trading is that you don't need to be right all the time. Trading is a lot more like baseball than it is like if you were at school, right? Like 50 isn't failing. Like 50 could be fantastic. In baseball, you're batting 300, you're going to the Hall of Fame. With trading, if you have bigger wins than your losses, then that's a winning system. So that for me, 50% is actually pretty good. Like it's slightly above my historical batting average, at least on the year. On the year, my batting average is what's my batting average? My batting average on the year is about 44%. But yeah, you can see too that my average winner is a little over 2 times what I risk, and my average loser is about minus 0.75. So that's what works out to be able to do this and to have like a 50-50 win rate, right? Like if you're flipping a coin, you got paid $2 every time it lands on heads, you lose $1 every time it lands on tails. That you flip that coin all damn day. That's basically what this is here. So um that is the market mood. Any questions on any of that? Actually, see a couple of stuff here. Betray, but Petru. Hope I'm saying that your name right. Oh, great. You like the playbook. That's fantastic. And then you're listening and you're taking notes. That's awesome. I love hearing that. Appreciate you guys being here. And Thamer, awesome to have you too here, buddy. Let's switch gears and talk about setups in leading stocks, and I'll talk about my triple filtration process. So, the first thing that I'll do, right, and I actually started to talk about this a little bit earlier, was going through that universe list, right? So I'll start with the universe list. Um, all the different stocks that I'm interested in, and I'll go through that list. Like that's the first filter to see, like, well, what types of things are setting up. I'll throw that onto a trade ideas list, and I'll actually go through. I started to look for other trade ideas before this live stream started. Wanted to be nice and prepared and give you guys real examples. So. Um, what I would do at first is throw them onto a list like this, like stocks that are in the neighborhood for setting up, and then I'll take that and then I'll filter it into like, all right, well, which ones are actually grabbing my attention, right? Like, well, which ones fulfill minimum criteria? Minimum criteria has to be like a gut feel of at least like I would say like at least three, but really like it's 4 or 5. Like it's very rare that I'm trading something with a gut feel of a three, especially in a market that's super choppy like this. Then what I would start to look for is uh, what's the no, what's the reward to risk? Where am I going to enter? Where would I set my stop loss? And then and what's my potential target? If it meets a minimum, right? And the minimum that I tend to trade is 3 to 1, then I'll take a closer look at it. If not, then it goes back into that neighborhood uh, list. So a few of them that I was looking at over here was Blackstone. Ticker symbol is BX. And let's see, well, what's the industry group for BX? Just trying to come over here and get Market Smith. I think Market Smith is high. Oh, there's Market Smith. Uh, so I've got this weird setup at home. I've got 6 screens, and even with 6 screens, sometimes things will still be hiding behind like another window. So Blackstone is the industry group rank is actually pretty good. The group rank is ranked 21. It's part of the finance investment group. Um, One of the things that, and I had this one on from the weekend too. It's actually pulled back a bit more. What I was seeing was it ran up, right? So kind of started on the weekly, made this little flag here, right? So there's the flag. If we just draw it real quick. So there's a flag. Come down over here. Okay, well, that's a ugly looking flagpole, but anyway, you get the idea. Um, so there's that, and then what I'll do is I'll take a closer look here on the daily time frame and see how does it line up, right? Like, is there enough reward to what I would risk? So I would look to enter around here, and at this stage, I'm not getting the exact entry point and the exact stop loss. Like I'm just interested to see like how tight is the entry and the stop roughly. If it's greater than 5 or 6%, then I'm not interested in it. If And the reason why is because of how I track my stats, right? And that's where tracking your stats and having a journal like this becomes so powerful because I could just come over here, not to my stats page and look to see what's the size of my average losing trade. The size of my average losing trade is minus 5.15. So if I'm finding a trade that I would need to set my stop loss, like let's say I need to set my stop loss way down here, like close to the 50-day moving average, then I know automatically that that's outside of what my average loss is. And if it could still move to that level, not violate anything, not something might not be totally wrong with the trade, and I might get stopped out because of it. This trade happens to be within what I look for, and so that would be one that goes onto the watch list that I would do more evaluation on later on. Does everybody follow that? Let's see. Um, so this is one idea, right? So I would go through this, and well, we could take a look at a few more of them too, but just to go through fully, like one example here. And so this is one where it will be like, okay, it meets the minimum criteria. I'm looking at this, and one of the things that I noticed about this too is that yes, it ran up, yes, it pulled back, yes, it pulled back today, but it's testing the 21-day exponential moving average. It's doing so on volume. That's the daily volume right there. So, and we still have another hour and a half until the market closes. So that volume can change. But as of this point in time, it pulled back on pretty light volume. So as far as pullbacks go, like that's a good thing. If something is selling off and volume is light, then that's telling us that there's not like the big institutions aren't the one that's selling this off. So if it does reverse and break out, that's what I would potentially be looking for, to get in above this and sell below that. How I go about finding my target is I'll first take a look at the Fibonacci extension, right? Or actually, I shouldn't say that that's the first thing that I do, but uh, on a setup like this, that's the first thing that I'll do. I'll take a look at where do the Fibonacci extensions go. So in this case, like 130 would give me a 4-hour trade. 2618 would give me about a 2.83 trade. So right off the bat, that's telling me that if I want to take this trade and have my typical 3-to-1 reward to risk, I'm going to need it to get to at least the 3618 fib extension, right? So that's something that like I'm looking at this and I'm like, do I really think that it could get there? Maybe it can, maybe it can't, but it's something that's going through my head. So at least, as far as that goes, like this trade, I'm telling you right now, like it's not a 5 for me. Like it's kind of a 4, and part of the reason why is because I don't necessarily trust that target. Like, I think that 125 might be a better target for this, right? Like the 3618 is kind of a lofty goal when the market is chopping around like this. Um, but without that target, then it like the trade would barely, for me, in my eyes, wouldn't be worth my time. Um, But trades can surprise us. The market can surprise us. If everything else is good with it, then it's not something to necessarily write off the trade for. So that's why it's a 4 versus a 5. Here's a question that came in from Thamer. Would you elaborate how to determine the target if I'm trading based on momentum? Yeah, this is basically it. This is basically it. So that and there actually, I'll say that there's many ways that you can determine the target, but uh, what I'm sharing it is how I would go about doing it. So on a flag, what I would do is to first look at the Fibonacci extensions. You figure that out by taking the swing high of the pattern down to the swing low, and then that shows you what the Fibonacci extension levels are. In this platform that I'm using TradingView. You got the tool right over here. You grab fib retracement and you take from the swing high to the swing low, and there it is. Um, the other thing that you could do is and what I would do is to first look at major round numbers, right? So over here, you notice that the Fibonacci 2618 level is 126.53. For me personally, I would rather use 125 because that's more of a psychologically important number. If I were to use the 2618 level, since uh, I'm more interested in, if I were to take this, I would want it to be a 3-to-1 reward to risk. Then I would be targeting more of the 3618 level. And I would also then be um, using a round number of 130, right? And that gets me close to the 3618 level. If I were to use that level, the next thing that I would do is start to look for a measured move. So just taking from where the target is to my entry point and seeing where does that fall on this spectrum here. So basically, like it actually does count as a measured move from here, right? So from how the flagpole formed to the height of the flag is a measured move. Like it just basically saying that it's going to move the same distance as the consolidation. That works here. So that's how I would go about doing it. I'm actually kind of satisfied with that 130 level, given that it's a measured move as well. So that's how I would do it. The next thing that I would do after that, since I am interested in this idea, would be to run it through that Trade Gauntlet tool. And again, this is something that is available with the Mara Elite membership. So if you're interested in that, just go to marawealth.com and click membership, and you'll get it. Be able to access that, our Discord chat, other exclusive content for members. We do all that stuff. Um, but that is how you would go about doing it. These are other trade ideas that I saw that look to be setting up. We won't be able to go through them in that level of detail that we just did for Blackstone Group, um, just due to time. But just to give you the rundown of things that are catching my eye, right? And when you're doing that first pass, the way that I do it is I want to see what's going to catch my eye, and then after that, go deeper into it if it fits my criteria. Um, the reason why is because if you go in, like if you look super close at every single trade that pops up, you're going to be spending a lot of time on trades that uh, mm, that aren't the best, and you'll be wasting time. So it's more of a time saving thing. That's something that helped me out quite a bit when I was trying to trade part time many years ago, and I've stuck with that. So KFY, Pacey, team is shaping up well. Like that actually held up pretty well. Chipotle still holding up. I actually really like First Advantage here, how it gapped up and how it has two inside days in a row. Um, SD, yeah, it's more of in the neighborhood. It's not really setting up right now. It could possibly, but it's got some more work to do. Now is halfway decent. Asan is one that I've been in and out of a couple of times. Actually took it last week, sold a third of it, and then sold the rest down at break even because I didn't want to hold it through this mess. We'll see how it recovers. And part of how, well, when you're thinking about trading, right? And when you go on YouTube or when you go on to Twitter or StockTwits or wherever, and you see different people talking about like, oh, this is a great trade. This is this trade is weak. Well, blah blah blah. It's important to think about what is the time frame. What is the perspective? Like for me on this particular trade, it was intended to be short term. So when I'm trading short term, my mindset is, should I hold through a consolidation? No, right? Because it's the intention is for it to be short term. I want to be out within, a week or two. So I don't want to spend time and money when the trade is going nowhere. So I'll take gains faster and I will scale out faster. And so far that's been a great uh, thing to do for this type of market. PKI, maybe it's on the maybe pile actually. Yeah, like looking at it now, right? And so like when I do that first filter and I'll go through it again, if if I don't have a good feeling about the stock, like I'll just kick it off, right? Like I won't kick it off completely. It's moved back to that in the neighborhood list, but yeah, you want to feel good about each trade. Um, This one, this one too. I'll put back in the, and that this is actually looks like it's setting up decently well right over here. Like the gap up, it filled the gap. It's consolidating around its 10 EMA, and maybe it can go if it consolidates in between there and really this neighborhood. So we'll see if it can rally back above here. Whoops, didn't want that. And that's within the range that I would want, about 4 or 5%. Yeah, and it's setting up in on the weekly what could be interpreted as a flag, maybe a pennant. Um, then I would go and do more analysis on that. Um, any questions on this stuff that we just went over? And Thamer, I hope that answers the question. Cool. Petru, I trade 30-minute bars. I do too. I do too. So what I'll do on these trades too, right? Like, so I'll find many of the setups based on the weekly time frame. Uh, Also, really the daily time frame. That's where I'll find the bulk of the setups, and then I'll fine tune the entry points and the stop losses in doing a multi time frame analysis uh, using the weekly, the daily, and the 30-minute. Right? That's why I have this quad screen set up where I've got where I still have monthly time frames up here. I want to see the broader trend. I've got weekly, daily, and then 30-minute down here. All right, cool. So next up is setting yourself up for success. Simple daily routines, plans, execution, and journaling. So um talk a little bit about my trading routine. So before the open each day, right? Like the actually to just to give you like the full routine, like I'm always starting each day well with gratitude, right? Like I wake up and I've developed a habit now where like I want to start stacking gratitude immediately, like as early as possible, like when I wake up. Like just thinking about different things that I'm grateful for. It could be anything. It could be my family. It could be something that my wife said to me, something that my daughter said to me. It could be something else with family. Like I just had my sister in law's wedding last week. It was fantastic. Very happy for her and her new husband and my new brother in law. It could be. Following a trade plan. It could be being in good health. It could be for breathing air and having a roof over my head. Like just stacking as much gratitude as I can, so that way, like I'm starting the day in a positive frame of mind. Then, um, I did actually. Then the next thing that I'll do, I'll drink water, have vitamins, and then I'll head to the gym, and I'll do that 5 days a week. Um, on the way to the gym this morning, right? Well, what I ended up doing was uh what I ended up doing that on my way to the gym this morning was I started to recite some of the things that I was grateful for out loud in the car, right? So the reason why saying what you're grateful for out loud is that it, you're not just thinking it, you're saying it, and you are hearing it now, like out there in the real world. So it's reinforcing the gratitude, right? So like all that it's like about framing your mind, framing the day, and then like getting up and moving your body, and it's such a great way to start the day because when you go and you're about to go and look at the market and you see, oh my God, look at this. The S&P is down almost 1%, and the Russell is down 1.5%. Oh my God, look, I was long this one trade that was doing well yesterday. Today it's getting smashed. If you are starting your day from a place of fear and reaction, like if you're just rolling over, grabbing your phone and scrolling through your feed, like there's so much things that can be negative that it messes well with your mindset. And so that's one of the reasons why I love to stack gratitude first. Then even before I go and I look at the market, I'll go and I'll review my plans. Right. So I'll go over to my open trades, and now there's no open short-term trades, but I still have a couple of open crypto trades. I still have long-term trades, but if I had open swings, well, what I would do is look at the entry notes, right? Like, in fact, I'll even go over here, right? Like, these are the entry notes for recent trades, and I'll start to look at what was I thinking on these trades. I'll take a look at the market mood. So, like, I already know what I was thinking when I was in uh, a calm, happy, relaxed state, and then I'll start to go onto the battlefield which is the market, and see which way are things moving. It helps frame things better. It helps think a lot more clearly about, well, what's happening, and see more opportunities. So that's part of the morning routine. Then in the afternoon, what I'll do is I will start filling out this, right? Like towards the end of the day, I will fill out this market mood log, uh, get a greater sense of what's happening in the market. I'll look at my open trades. I'll look at the plans that I had for my open trades. So like if I was planning to sell at a certain level, and all the stuff tends to get done at night on the weekend, well before like the market is open and the bullets are flying. And then it's just up to me to, number one, follow the plan, and two, if there's a part that needs manual execution, then I'm doing that at the end of the day, and that's it. Other than that, all the orders get placed with my broker, and there's not much for me to do. There's if Sal's still here, I'll give Sal another shout out. Sal is one of our elite members that contributes a lot to the community, and he actually taught me something about this. He taught me OCO orders. What an OCO order is? It stands for one cancels the other order. So in your broker, depending if your broker has this, I use Thinkorswim, and they have it. What it lets you do is you could set your target price and you could set your stop loss at the same time, let it trigger when your trade triggers, and then you could walk away from the trade, and you don't have to sit there and babysit it or wait for alerts to go off. It's just there, and it's working for you, and it's great. The only thing that I do then is come look at my trades at the end of the day and see, is there anything that I need to do? Is there anything that I need to update? And that's it. And it makes trading far less stressful, and it actually makes it very fun, and it allows you to be able to do it part time too, right? Like I wish I knew more about those OCO orders. It would have helped me out quite a bit when I was trading part time, but now you guys get the benefit of it. So there's that. So daily routines, plans, execution, yeah, and then journaling. What I like to do with my journaling too, right? So there's the logging and journaling. I see it as two different things. So logging is I like to do that immediately. So for example, like let's say this trade here, right? So I updated this. Like this is something that I updated immediately, right? Like so on this day here, I got to my 1R target. So what's 1R? It means that I made one times the amount that I risked, and so whenever that happens, I let. Actually, hold on. I am not sharing my screen. Uh, there we go. Sorry about that. All right, so back over here, what I'll do is I will sell a portion of what I've made when I've achieved one times my risk. Uh, then I'll start to move my stops up, right? So that way I'm taking off my initial risk and letting the rest of the trade do what it's going to do. So on this trade, what happened was it got to one times my risk, took something off. I logged that immediately. Then over here, it broke. I broke even on the rest of it, logged that immediately. And now what I need to do, right? So that's the logging part. Now the journaling part would be to come over here, and I want to answer two questions, right? Like two big questions. What worked well with the trade, and where can I improve? Right? And I want to frame it as what can be improved versus what went wrong, because it's a positive spin on it, right? Like if you're like, well, what went wrong? Your mind is going to start thinking about like all like all the negative things, right? Like if you have a habit of beating yourself up, a question of what went wrong will tend to trigger that. So where can I improve? What will I improve? What must I improve? Those are good types of questions to ask yourself. Questions are the answer. perhaps you've heard that somewhere. Maybe from me. That it's really true, and I highly encourage it. And that's that's basically it. As far as my routine goes. Um, Now I'll open it up to Q&A. What questions do you guys have? Um, let's see. I'm just scrolling through the list here. Um, we've got something from Petru here. So I'm looking by day, sell days, and short days. Um, so for buy days, sell days, and short days. Okay, so um, when I'm in a trade, well, the first thing that I look to do would be like if I'm long a stock, right? Like let's go back to Asan. And do I still have my notes up in Asan? Yes, perfect. So here's a live chart of Asan. Right. So if I'm looking to buy, I want to buy in an uptrend. Right? Like especially for short term, I want to be buying in a stock that is consolidating within a longer term uptrend. That's why I've got uh, all these different time frames up: monthly, weekly, daily, even the 30-minute too. When I'm in the trade, the first sells, right? Like I always like to give myself four different ways to exit a trade, right? Like I think of it like going to the movies. If the movie sucks, the closest exit is going to be right behind you, right out the door. I like to get into a trade very close to that first exit, right out the back. So that'll be down here. That's a stop loss. Then the next exit I'm looking at is my main target on this particular trade. I was looking at 100. Like given the setup at the time, I was looking at it as a potential high type flag. The move could be about that much. So I was looking for that. Then the other types of exits, right? Like, so I'm looking at selling at different targets, right? So that's the ultimate target. Then I'm selling at 1R, 2R. So we'll put it into buckets of stop loss, targets, then I'll use trailing stops and I'll use back stops. Trailing stops, for me, I like to use the moving averages as my trailing stops. And it's something that I'm not setting up with my broker. It's something that I'm executing manually. And the reason why is because I want to see how the stock closes at the end of the day. What'll often happen is you'll get these little dipsy doodles during the day where, yeah, it's closing below a moving average, but it's also getting support at a different moving average. So that's where some discretion comes into play. What I consider the backstop is as I'm raising my stop loss, that's what I consider the backstop. So I'm giving myself four ways to exit a trade and multiple ways to win. That is something that's one of the things that's led to my success over the years. Giving myself multiple ways to win in a trade. As far as selling short goes, like I'm looking at this, right? And it doesn't seem like the type of market to really go short yet. Like at least, and I'll preface it, or like I'll add that for my particular style, it's not the kind of market that I want to be shorting just yet. When I went through the universalist, I did see shortable patterns, but when the market is in this weird choppy zone, like it's like there's reasons why buyers would step up over here, and we're already seeing it on the Russell, like buying weakness, right? So over back here, I highlighted levels like this is support on the monthly time frame. So each time the Russell has gotten close to monthly support, it's rallied over here, yeah, it's starting to get close to monthly support again. But not only that, it's right on that 200-day moving average. So there's reasons for buyers to step in. So if I'm looking to short stocks, then there's a strong chance that buyers are going to do a short squeeze. So I want to avoid that. This here is actually a halfway decent opportunity to sell puts, which is an advanced strategy. And we actually don't have time to go through it now, but perhaps in a future live stream. Any other questions? I'm getting we're close to the end here. Going to wrap things up. Yeah, great. So yeah, it's 3 o'clock now, so we'll wrap things up. I want to say thank you all so much for joining me on this first live stream. It's been fantastic. I'm looking forward to doing these more often. So definitely stay tuned. And if you want to get the playbook, the trade ideas, coaching regularly, access 24/7, access to our Discord, access to live streams, private live streams. We do a private one with members every week. Join the Mara Elite membership. Just go to marawealth.com, click membership, and sign up. And that's it, everybody. I want to say thanks again for joining. It's been real fun, and I'll see you again next time. Take care. Much love. Peace out.